why don't you start introducing the panel and please make us dream. Thank you.
Thank you, Matteo. And thank you to BAI and to FintechStage. It's great to be here. As you heard, I'm Matt Gamser. We're going to go from the ethereal heights of the discussion we just had to the ground level of the life of small businesses, which we've touched on many times during the day, but hopefully we'll be able in some ways to integrate some of that lofty discussion because as you've heard throughout the day, the one thing that's common is that life for small businesses in their banking experience is not always so good. And we're going to talk about maybe what FinTech can do to change all that. And I'm very pleased to have a panel of 4 very experienced people in the FinTech sector who are working on different aspects of this. I have from my left, you're going to my right. First, I have Ruth Polachek. Ruth has been both a FinTech entrepreneur and a big banker because she at one point was running an incubator for Citi in their FinTech ventures. So she's going to look at this from many different perspectives, I hope. You've heard from Anatalio already, if you were here for the FinTechs themselves. He's going to talk about his experience in working about how FinTech can help more SMEs to be better SMEs, as opposed to helping banks necessarily be that much better to SMEs. On the other hand, we have Kathryn, who you probably haven't heard today, but maybe many of you know of Kabbage. Kathryn is a co-founder of Kabbage and chief operating officer. And Kabbage is known as perhaps a disruptor, someone who's come to eat the bank's lunch, to take the business away. It's a little more complicated than that, but she's going to approach it more from how we can make the financial services a better experience for the SMEs. I may be mischaracterizing it, in which case the panel is going to fix this for me. And then finally, you also heard Zack earlier today with our FinTechs. And he was talking about consumer finance and RevolutionCredit. He's going to talk more about what they're doing in the SME space. But first, let me set the stage just a little bit, if I can make this thing work, which maybe I can't. Okay, so first, a brief infomercial. I run something called the SME Finance Forum. I work for an organization called the IFC, which is part of the World Bank, which you've heard of. The SME Finance Forum is a space that we manage for the G20 countries where you can exchange knowledge, information, good practice, discussions. It's there, it's on the internet. I urge you all, at the end of my slides, there's a website. That's enough for the infomercial, but it's an interactive space, and it's becoming a global membership. The SME, in case you haven't been talking about it earlier, they may be small, but they're big business. The credit gap alone of formal enterprises globally is in excess of $1 trillion. Many of you have heard that before because that was based on McKinsey IFC research that was back in 2011. But what you may not have heard, because we just came out with this report with the World Economic Forum, is that annually, if you just look at the small retailers, so that's in layman's terms the mom and pop shops, and how much business they're doing in cash, that market is, we conservatively estimate, about $19 trillion a year. So this is not just about credit. Think of if you can create, as we were just talking, a payment system that might work for small ticket deals. 19 trillion a year, that's still, and then what can you do if that is in electronic form instead of being in cash, which is very hard to deal with. So why are we talking about all this? Because if you haven't twigged onto this from all the discussions at this session, the way we've done banking previously, it's not good for the SMEs and it's not good for the bankers. Everybody's unhappy in my highly technical slide. Big market, but it's a pain. The technology we've used before doesn't work. Yes, maybe for the big ticket customers it works, but as you heard even in the last panel, it might be in these smaller ticket spaces that the new technology may be making then, and now. Up until now, too expensive to acquire, too expensive to serve, forget about it. Whoops, sorry, it's gone back on me. Because the only way we got around the information problem of these messy SMEs who were doing all their business in cash was we literally went out and kicked the tires. The successful institutions had that in their DNA. And there are some around the world. But for the most part, they're not very big. And for the most part, in their markets, they're not very big. That's why the gaps are so big. So we have to figure out a way to move from the shoe leather to the smart young men and women who can work with data. The data that's increasingly becoming available. And you're going to hear about how that works in a second. Just one final word before I turn to the panel. We're also having to compete with the headwinds of some of the policy response to the global financial crisis, which when I last checked didn't have a lot to do with SMEs, but unfortunately, some of the things that are happening about the way that Basel III, and as bankers like to negatively talk about it, Basel IV, the unknowns going forward, the higher capital requirements, and the lack of flexibility about how you treat certain risk weighting of certain assets that don't have qualities that SMEs just don't have. They don't have fixed assets. They don't have audited accounts. They don't have a lot of great documents that are properly notarized and things like that. And unfortunately, those things are still in our, and I hope our panel can comment on how that affects their business or doesn't affect it and how we're going forward. And so that's quickly note the web address, because I'm going to move back to the description of our panel, because I want to go through the panel one by one and sort of get a take. I mean, you can, Ruth, you're working both sides, both how to make the bank work better and how to work the SMEs work better. Is there a point in this panel? Is the digitalization, is FinTech really able to make a substantial difference in this space?
Absolutely. I think today there are a lot of changes in FinTech and in a lot of different fields. And a lot of them you heard about today, but if we try to look at every specific field, SMB is actually, because there hasn't been substantial change, and for the banks, it's a very difficult space to disrupt, or actually for anyone. It actually makes a bigger opportunity for FinTech, both for the banks and also for innovators.
And so, Anatalio, you're working, we heard about SizeUp. Maybe some people weren't here, but I don't want you to go through the presentation again, but you have the challenge of both trying to work with some of the bigger banks in getting them to take your system in, Wells Fargo and Deutsche being two, and you also have to figure out how to get the SMEs themselves to understand, how are you faring in these different challenges? What are you finding are the promise, and what are the obstacles?
So one of the big challenges, I guess, of serving small businesses is how do you reach so many that are so different? And I actually came from a background before all of this of doing economic development, and we would go and meet with small businesses and say, how can we help you? Hi, we're the government, we're here to help, right? But it wasn't a very effective way because it's based on people, it's not scalable. And so kind of my software mind always thinks about how can we scale to be able to serve all small businesses? And I think that, computing, technology, the distribution through the internet provided that kind of opportunity to be able to take a scalable model of serving small businesses. Now, we had to wait until, cloud and computing was available. But now that it is, there's the type of things that all of us are delivering. So I think that fintechs that are focused on small businesses have jumped into a space where banks perhaps are underserving them, but also it's inspired in some of those banks to figure out how can we be a platform so that we can better serve our small business customers. So with SizeUp, we're trying to touch both of those pieces because the banks want to have a sticky relationship with the small business, and it's in their interest that those small business customers succeed also.
So the potential positive feedback is that the more that you can bridge the understanding, the more you can find services that also through the same digital channels may be affordable, that it's not expensive to serve and it's not as expensive to acquire.
Well, when you move from manual to, and there was a lot of presentations today about how you use digital so that you can customize. It really can be one-to-one based on that small business's situation, and they've really never been able to see that. They could never afford it.
Kathryn, a lot of people probably know about what Kabbage does in the US in this audience, but I'd like you to talk about your perspective of why is it different? What have you been able to do that's made a different experience so that you can do more quicker, more adaptable turnaround for especially the lower end of the small business market? But at the same time, is it really hopeless for banks? Is it right to view Kabbage as a bank killer?
I'll answer that second question first. 80% of our customers actually bank with the top 10 banks. So they are served by those banks for deposit accounts, just not for lending. Not because the banks are bad guys or they don't like their customers. They just don't have the technology to do it. So we think there's a huge opportunity to deliver that type of technology to help them do that. And we would like to be part of that. Our business itself couldn't have existed 10 years ago. The idea for Kabbage was born out of an eBay API that was launched in 2007, and my co-founder, Rob, thought, wow, that's a lot of really unique data about a business that happens to sell on eBay that you could use to make a real-time underwriting decision. And thus, Kabbage was born originally to deliver small business loans to eBay sellers. And I think what was important about that, it was the real-time persistent access to third-party verified data that created the user experience that we have today, so that our customers are able to get through the process in less than 10 minutes. And in the old eBay days, it was 3 minutes. And so we were able to make a great decision, continue making a decision, deliver a unique product, which is a line of credit that they couldn't get otherwise, and all do it really, really fast and accurately. So as we've continued to expand, we have that same focus on user experience, on real-time access to data, and we've done that regardless of what type of business it is. So 90% of our customers are brick and mortar businesses today, not online sellers, but we still continue to expand in that space. So I think that initial focus on technology is what really has made a difference for our customers and for us.
But even just to clarify, even if they're bricks and mortar business, it's still important that they're doing their transactions electronically, that without that, it would be hard to achieve the efficiencies you're achieving.
That's exactly right. And we require our customers to connect us to these data sources that we can use to make a decision. If we can't get to checking account data, for example, I don't have a manual process to do that. You don't get a loan from us if I can't get access to the data, and that's a really hard decision to make. You have to really be confident that that you need that data and that eventually the customer will find a way to do it, or that you don't want that customer. And it's really hard to walk away from customers who either don't want to give you the data or where you can't get that data. But it's important to us that we are true to that.
So Zack, I listened to your presentation a couple hours ago, and you were talking about consumers and that it's not just that the banks are doing a bad job of serving. We got to also say that SMEs can create problems. They don't always behave the way they want, just like you were saying consumers don't. Now, you described various nudging, I believe the term you used, about having to change. Can this work for SMEs? I mean, are SMEs with all that diversity amenable to this sort of?
Short answer is absolutely, and I think I have a pretty unique perspective on small business amongst the folks sitting up here. You were talking before about the SME credit gap. We're operating today in that gap, so to speak, in our consumer clients. We're born and bred in consumer, but our consumer lending clients are already seeing their consumers take out consumer credit loans that they're then applying to small business purposes. So we've been almost pulled into this market to help serve and meet those needs. And for anyone that wasn't here earlier, what we do in a really quick nutshell is we help create data in real time to clear transactions that wouldn't clear otherwise. And so specifically, and I'll juxtapose what we do, we're a B2B software provider, not a balance sheet, never will be, to what Kathleen and even other big and established brick and mortar banks would do, which is we take a specific view, not necessarily on transactions and historical data, and even necessarily one's ability to pay and their liquidity, but conditioned on all of that data, we then go one step further and take very specific views on individual, and in the case of small business, entrepreneur borrower, will and skill, or specifically in SME context, the capabilities that they have. So long story short, if someone gets most of the way through a process at a bank, or like a Kabbage with Kathleen, Kathryn, what we can help do is create data to make that clear in terms of separating the people who are willing to actually go through and learn something about managing the finances of their small business better. We require work from people to get a sense of their behaviors and their willingness to do things, but we're not taking a look, for instance, into past transactions. So we're really marginal on top of what can be known elsewhere, and then we drive business from there.
An interesting new angle on this, and it'll be. And I saw the graphs you had on the different behavior of defaulters in the consumer space. It'll be interesting to look as you get more information about SME space, whether that same sort of phenomenon applies. Kathryn, I didn't tell you I'd ask you this, but I remember being on a panel with your other co-founder and a large American regional bank that I won't name at the US Treasury last December. And your co-founder, Rob, was going through the sort of stuff you do. And the head of that bank basically said, you know, we get this, and we have access to this sort of information. But the problem is I'm a regulated bank. And I want to go to my policy headwinds slide and get your take on it. And he said, I could do this investment, I won't get any recognition for it. So I really, as a regulated institution, can't move into this space. I'd be very interested in what you and what Ruth with her old Citi cap have to say about how, is it really so hard? And for the regulated banks, particularly the bigger banks, and what should we do about it? I mean, can we do anything about it?
There has been a lot of talk, not as much in the last 12 months, but 24 months ago, the big buzzword was regulatory arbitrage. And the theory was that all these fintech companies and alternative lenders were coming in and unbundling, if you will, what the bank services were. But the fact of the matter is everyone's simply providing products and services that the banks are unable to provide. What I think is really interesting is that most of us in this space who are on the lending side are quite regulated. So every loan we make is issued through an FDIC regulated entity. I've been through 3 FDIC audits. We comply with all of the normal things, KYC and CIP and AML and FCRA, and like the list goes on. And so we do all those same things. So there's no reason that a big bank couldn't do what we're doing, which is why, interestingly enough, internationally, the banks are knocking down the doors to partner with us to license our technology, and it's why we're live in 5 international markets with $3 trillion banks. Because at least outside of the U.S., they recognize that there's a huge opportunity here.
But okay, let me, because I'm not sure that may have just gone by people. I mean, what I heard you say is that in the U.S., whether you're sourcing clients from the banks, you're making the loans on your balance sheet, and they're your business. But overseas, you're doing more of a partnership sort of approach where the banks are doing, maybe even you're doing software as I'm not exactly sure what. Maybe you want to say more about what that model is, as much as you can with what's already known.
And I'm happy to, it's fairly well known. We talk about it a fair amount. So they're basically licensing the technology and integrating it into their core services. So if you, for example, are a small business in Spain and you bank with ING and you log into your banking account, you'll see an offer for a loan. You'll go through the entire application process. You'll get funded. That process is driven by Kabbage. So it's our software, it's our technology, but it looks like ING. It's their money. It's their customer service. In the case of Santander in the UK, where we're live now as well, it's more of a hybrid. We're actually doing some of the servicing for them. In many cases, we have opportunity to participate in the balance sheet because there's always going to be some customers that the bank is uncomfortable with for whatever reason. So it's really it's a different menu, I guess, in every country and with every bank partner. But I think what's most important is that they're interested in the technology that allows them to serve customers they couldn't otherwise serve.
Yeah, I'd like to add to that. I think it's a great example just to see innovation. When we at Citi would look at companies, there are many things that theoretically could have been done in-house. And specifically with small, medium businesses, today also with FinCheck, we talked to a number of financial institutions, and many of them are basically trying to have specific solutions for SMBs and things that they know they could do. Sometimes it's easier to have an innovator do from the outside because the incentives internally of a financial institution isn't always aligned with the aligned with the small business or with the fintech company. So even though regulatory and otherwise it's something that is possible to do, sometimes it's easier to have an external company do it for you. So that's something that is actually true in other fields, but specifically with SMBs because there's a huge risk basically risk management is one of the most important things, if not the most important thing of the bank. So anything that's might be of a concern and related to credit is something that a bank has to deal with very delicately. And that's actually the biggest opportunity, because for SMBs, that's probably the biggest concern. And you mentioned before that SMBs are underserved by banks. Basically, it's for a bank, it's just easiest because the resources sometimes are so much bigger and the potential opportunity pretty much similar to consumers. A lot of banks just, part of the consumer bank. Therefore, it's a huge opportunity for startups.
Interesting. I'm trying to put myself in the shoes of a bank that's partnering in the U.S., thinking about, okay, I've got these really clever people, and they've got this, even if they're kind of helping try to educate me about how all this data it's being processed in a different way is working. Aren't I still on the hook if, let's say that a customer is declined and they go to CFPB or some, and they say, look, I don't, how, am I worried that I'm contracted this out? I may or may not understand this. Am I able to really manage that sort of operational risk?
No, of course. It has to be airtight, 100%, even if you're using an innovator or collaborating with a startup. It's just there's so many resources to even develop it that it just won't be done internally. But once it has been done already by a startup externally, there's an opportunity to basically potentially integrate it. But doing collaboration like that is something that it's not a simple matter at all. We went through a lot of those, both my previous hat and the current one. It's something that is one of the biggest challenges today, because for banks and financial institutions to innovate themselves, I think Matteo had in the morning the dinosaur slide. It's my favorite. It's not something that can be changed very easily. On the other hand, for our entrepreneurs, without having resources of such a large financial institution, it's also impossible to innovate. So the collaboration is kind of the sweet spot, but that's the hardest thing, because it has to be airtight, and the trust in the financial institution cannot be changed and cannot be moved. But the incentives for the individuals, many times, is what drives the innovation at the end of the day.
I would love to add on super fast, if you don't mind. So I think there's an important difference between, on the compliance side, is it policy or is it actual regulatory compliance? That is one of the things against which we push all the time with banks, because they will say, oh, well, we have to do it, it's compliance. Well, why is that? Well, because we've been doing it for the last 40 years like that, not because there's some regulation that requires it. And that's a really, really important distinction. We had a top 3 global US bank in our offices. They brought 20 people, they were doing diligence, they wanted to partner with us. And I was sitting in the regulatory and compliance meeting, and one of their lawyers said, well, can you do this, 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 and this? And I said, you know what, I can add as much friction to the process as you want, but at some point, it's not going to make sense for you to work with us, because we're just going to be doing the thing you already do. And I think that is one of the challenges.
Interesting. So it's about reassessing. Please.
No, this is a perfect topic. I'm so glad you brought it up. We, as a data provider, not a balance sheet necessarily, but we end up in really similar conversations to the ones Kathryn was just talking about, where somebody says, can you come in and do this with your technology? But instead of doing it the way that you usually do it, can you do it like this for us, because we kind of like that better? And it's like, you are slowly but surely watering down everything that was creative about the idea to begin with, but there's another side of that coin, which in a really serious way, what you're getting at, I believe, is a criterion for success for startups in the financial services industry, which is different from every other industry, which is that regulation and compliance matter so much that in some ways can be a determinant of success for a company that's trying to grow and sell into big FS companies. If you can't speak their language and either understand their concerns or push back intelligently or meet them in the middle, you're cooked in a way that Facebook didn't have to deal with. They weren't disrupting anyone. They were just building something new. We operate in a world where if you don't understand the nuances down to the letter and the spirit of every regulation from OCC, from CFPB, from the Fed, you name it, from state regulators, you will be toast in fintech.
Well, maybe as Facebook starts moving into money transfers and things, they're going to be understanding this very quickly. And they certainly learned in India about how things can be a little less straightforward than they might seem. Yeah, but this is a really good point about reminding us also at the same time that regulation and compliance aren't the same thing. And there's tradition in compliance about we used to have to do it this way, and so this is the way that if I'm a supervisor, that I expect it, even if there now may be other ways to do it. I'm hearing this from the panel, and maybe...
Yeah, I would even add, it's not only compliance. It's sometimes processes that are just the way things are done, and you were relating
Inertia.
to that. Yeah.
Just inertia.
So we're not regulated. I'm glad I don't have to go to all the meetings that you go to. But tradition is no joke. Like, it's so deep in how people experience and the way that they do things. So we have a tool that empowers the bank's small business customers to help themselves, do it yourself. And so some of the banks that we talk to are still thinking, okay, but we don't do that. So how does this fit into our existing model? When, like you said, really the value is new models. Right.
Well, I'm glad you jumped in, because I was thinking about, most banks, they do SME one of two ways. They put it in corporate or commercial, or they put it in consumer. And it doesn't really fit in either, because SMEs, you need the efficiency that consumer brings, but they expect the touch, themselves. And so to some extent, can we now find a way to have it all? You're trying to work in a space that essentially is trying to give that SME the feel that I understand you on an individual real-time basis, no?
Right, so, you want to...
Oh, no,
okay. So, yes, is it possible to do mass customization? So we treat each small business customer really as what they are, as an individual. Now, there's one side of that, which is that every small business thinks there's no one else like them. And I get why they feel that. But at the same time, they're dealing with many of the same issues. So the SizeUp solution is you take a lot of data to understand what's going on with the business so that you can make it relevant for their unique situation. So yes, you can, and you can do that different ways. You can still bring it so that the bank in that higher touch relationship, where the relationship manager is having a more intelligent conversation, helping that small business be more successful based on data that's unique to them. So you still can do that.
Because it's not only that the SME doesn't have the time to go through some of the historical bank processes and all the documentations and the delay, much less having to redo it all over again from scratch if you have to go to a second bank because you got declined. But they also, at the same time, pose problems on how they're running the business, right? They also don't have time to go to training courses, certainly not in classrooms. They do have real problems, and they need immediacy. But that's historically been impossible. I used to advise banks, look, forget that side. It would be great if we could do that, but concentrate, let's get the finance right, let's make our credit officers productive, at least we'll solve some of the problems. Is that the right way forward?
So this gets to the issue of the fact that small businesses have challenges that are bigger than what your bank delivers or your fintech delivers. So it's important to think about the entire kind of life cycle of a business, all of the issues that they have. Who do they go when they need information or help? They're going to their bank, they're going to their lawyer, they're going to their accountant. So I think that banks and fintechs are getting smart, and actually anybody who's trying to serve the small business space is recognize the importance of being a platform for small businesses. So you see with Wells Fargo Works or with Deutsche Bank, they have platforms that provide services beyond what the traditional bank provides because they realize the value of that relationship, helping them with exporting or business plans or business intelligence and market research like what SizeUp delivers. So I think that banks and financial institutions have to be more.
And Matt, I love how you teed that up, which is in an ideal world, every finance director at every small business would go for continuing professional education and would be really invested in making those incremental improvements on a day-to-day basis. But there's only so many hours in the day, and we all know this. And as a result, where we're going with our small business offering is to design a really powerful interactive experience that is going to be more in-depth, more rigorous than what we offer on the consumer side, but which actually puts that level of touch and education and engagement in the point of transaction to help small business, in this case finance directors, either get better pricing or better terms, et cetera, on financing in exchange for them showing that they are willing and able to get through that type of material, and we're making it matter for them. People don't wake up and want to go out and do this necessarily because they got other problems, but as soon as we're conditioning financing or pricing or terms on someone successfully engaging and completing, that's when you get somebody's attention, and that's where you really have the opportunity to nudge someone to even better performance, which actually does create more creditworthiness in the world.
And can this really be done? I mean, Ruth, let me have you put both hats on, as both a fintech and a former big banker. Can this really be done and it's still affordable as a proposition for a Citi, for a Deutsche, for a Santander, for a big bank?
I think it is, but it's a big challenge. Meaning, it's not something necessarily simple for a large corporation to go through all that, and therefore I think the right way is for a fintech to do it, and basically the integration is the biggest problem. Finding the way to connect to the existing solutions and collaborate with that.
And of course, it may be different in different parts of the world, because here in the US, of course, we have a very different market. We're not as bank-led in terms of especially on the lending side, where we have many more things going on in the non-bank space, in the capital market space than even Europe, and forget Asia, Africa, Latin America.
Yeah, but I think what's important is that it is the case. I mean, even though a lot of companies are different from one another, and every single company, even in the same space, has its own specifics, what Anatalio mentioned before is that there are things that are common for all the companies. And most of these things are not the core business of the company. And that's actually a huge opportunity, because, and it's what we're focusing on, and what actually when I was at Citi as well, we were looking for companies that, in the SMB space, that helps as many companies as possible. So of course, focusing on specific solutions is important, but then if you're able to provide a service that basically helps the company run its business with a focus on providing capital, providing, running, all its accounting, all its finances, that is something that is a huge opportunity, and something that's important. I think all of us are working on solutions in that space.
Yeah, this actually relates in some ways back to what you asked before, which was, how can banks afford to be investing here? My question back is can banks afford not to be innovating? Where there are so many solutions right now in the US, as our market research is in the throes of it right now, in terms of how these financing problems are being solved. There's working capital financing in every way that we can imagine, merchant cash, other sorts of things for all sorts of businesses who are paying way, way, way higher prices for that money than they would at a bank, et cetera, et cetera. So at some point, if banks want to grow, that's a segment into which they can grow, and banking in the United States is like a pretty tough business in a lot of ways. Like, where's the growth going to come from? That's why I ask the question, can you afford not to be figuring out how to lower your costs to serve and digitize more and more in order to get all this done?
Well, I guess you can compete for the cream of the crop, and you can continue to whittle the margins down there in a zero-sum game. Or maybe, we started this day with all these statistics about unbanked and underbanked, even in the US. I mean, this is where you can look for the growing markets, and then there's opportunity. You can keep competing. As much fintech, to be honest, is still looking at competing for the well-served market, and it will help some people win, but maybe not as many can win.
I want to add on this. It's true sometimes, though, in theory. I mean, there are specific banks that are working on solutions for these things, a number of them, but still, it has to come from the top. And also, at financial institutions, many times you need hundreds of people to make such a decision to start investing or increase in investment in a field that hasn't been the main focus. So this is a huge strategic decision. So for a financial institution of top tier, of a decision of this magnitude to shift investments into specific innovation in a specific field, that's a big deal. So there are financial institutions that are there or on the way there, but it's part of the market being ready and the increase in innovation in fintech. This is a gradual change, and it's clear that the banks will get there, but some of them, it will take time.
Well, also earlier today, people were talking about you can look on this as corporate social responsibility or a loss leader, to put it in more commercial language, or, and if you're going to look at it that way, an old view that this is a market that we're never really going to make money on, but we have to be in, but if it requires a leadership change to think, well, this has to be a core part of how we're going to keep growing this business. And at the same time, I mean, I was thinking as listening to you and listening to that earlier remark about millennials are so much more willing to just jump and switch. Well, it's one thing to jump and switch if I'm taking one product from you. But if I'm taking a suite, maybe even if I'm a millennial, I have to think a little bit about it. I mean, you guys are closer, much closer to millennials than me, all of you on this panel. But I wonder what you think about that. To what extent it's really important in the SME business, in the fintech space, to help in having this multiple relationship, multiple faceted relationship service.
I just want to, well, first I want to talk about this issue of corporate social responsibility, because I think there still is an element of that. Helping small businesses is good. It's good for society. I mean, this is where all of the job creation comes from in almost every economy. And you think politically, do you ever hear any politician saying, oh, forget about small businesses, we don't care about them? The first question in the presidential debate, folks talked about supporting small businesses. So I still think there's an element of that. But bottom line, like, small business is big business. It's 99% of all the companies in most every economy. It's half of the GDP in the US. It's this massive market. And the companies that can figure out how to serve this market well are going to be wildly successful. Like, you're the model of that, right? There's this massive opportunity. They figured out how to serve it. And now more and more small businesses know their company. So if you want growth, as you mentioned, here's this massive, massive opportunity. How can you ignore it?
Yeah, and I mean, I was, to go back to my slide about 19 trillion, I mean, about 6 or 7 of that is in Europe and North America, by the way. We can wait. If I'm a banker, I can wait for Visa and MasterCard and maybe even PayPal to figure out how to bring that to me. Or I can maybe think about why it's not with me yet and figure out with FinTech how to get a piece of that. A piece of 19 trillion a year is maybe, we've been talking a lot about lending and a little bit about the business management and SME support, but there's a whole host of other things that in the basic payments and other space that may also be big business that's sitting on the table, no?
There's a reason that PayPal and Square and other processors are offering their own products today. In Amazon, I mean, the list goes on. And it's because they recognize that a rising tide lifts all ships. So the more capital you inject into a particular group of small businesses, then the more they're going to sell, and the more they're going to buy, and the more they're going to spend. And so therefore it's going to, change that particular ecosystem. So I think that's why you're seeing a lot of growth with payment processors in particular. They can fish, however, only from their own pool, whereas the banks have access to a much larger pool, because every one of those businesses that uses PayPal, that uses Square, they also have a bank account. So the banks are in a really, really great position to serve them if they're able to do so. But it is a really long tail of very small businesses, and the only way banks are ever going to be able to do it is with technology, and they have these really cumbersome infrastructures that make it difficult for them to move quickly without partnering. And even when they do partner, they make it even harder for themselves just because of the slow pace at which they move.
And we heard a lot in the blockchain discussion about things that were making my mind hurt, but I heard very clearly that the basic payment space, as the smaller you get, the less efficiently it works. And so that's maybe why in that space there may be more potential to find new pathways that could could challenge the existing models and make that long tail more accessible more quickly, as opposed to, say, high-frequency trading among big capital markets deals where it seems to be working pretty well for the major interests that have invested heavily in it. If I'm paraphrasing, forgive me if I'm getting wrong, the previous panelists can correct me in my interpretation. But yes, go on, Zach.
Matt, I really loved your slide, actually, the one with the guy with the cost is just too high. I thought that actually sums up what we see as a really big problem in SME lending overall, is it costs just as much to underwrite a $50,000 or $100,000 loan as it does to underwrite a loan that's substantially higher and going to earn you more money. It's a really simple question in some ways for you guys out there, which is, what are you doing to lower your costs to serve an SME, and how can you use technology to do that? Otherwise, somebody's going to keep beating you to the punch. It's interesting. It's quite simple.
Now, Matteo, I can hardly see you over there, but you haven't brought me any questions. And these people have sat through to the bitter end, and I want to give them a chance. I don't know if any of them have already put questions through the technology, but can we maybe have the magic cube and whatever it's called, the FintechStage cube, and see if anybody in the audience wants to ask questions? Because certainly you've stayed this whole time. We need to give you a chance.
I'm here.
No one? Because I'm happy to keep talking with everybody, but I see, thank you, you did stay. We do have more audience than panelists, which was one of my worries today, to be honest. Mateo's buying drinks for all of you afterwards as a result.
You got a bit less than that anyway, so go ahead.
So, well, okay, but raise hands and try to get his attention, and he can throw you that object at any time, or he can hand it to you if you're a little shy about it being thrown. So let's look forward. Where do you see, let's take Kabbage, because as you say, in your new model overseas, you're taking a very different, more of a partnership approach. So it's not us or them, it's both. How far do you see that going? How far do you think you can take this? What's your vision about how widely spread you can be and how much you have under your wing in a few years' time?
We learned the hard way, actually. We actually launched on our own in the UK about 4 years ago, and it was fine. We became a licensed lender that took 11 minutes, and then the really hard part was we couldn't get a bank account. We only served eBay PayPal customers for 2 years because we couldn't get any banks to let us move money through their institutions. And it was really, really challenging. And then, of course, there were all these regulatory changes that occurred. And we sort of learned, hey, this is a real pain in the ass. It would be a lot easier for us if we would just partner with the banks that are already there. And by the way, they were coming to us anyway. So from our perspective, we'd much rather grow in partnership with the banks, but that's also what we'd like to do in the US. The challenge is the banks in the US are simply moving very slowly. We have banks all around the world knocking down our doors, but in the US, we struggle to have conversations. And frankly, these initiatives at the banks that we're working with, like Santander and ING and Scotiabank, these have come from the CEO level. So these are top-down initiatives. The folks we talk to at the banks in the US, these are sort of middle-up initiatives. And those things are never as successful as when you have buy-in from the very top levels of an institution. So I think that's been a big difference with our experience in the US. We would love for it to be the same. We believe we can operate in every market globally in the next 10 years. That's our goal.
I do think, one thing I noticed maybe about 6 weeks ago was a smaller financial institution in the US called Wells Fargo announced an instant loan product for merchants that to me looked a lot like a Kabbage type product, let me put it that way. And so you're not without your effect if one of the largest banks is clearly, maybe it's a dinosaur, but it seems to be dancing a bit.
It was super fun, too, because they had a whole bunch of us FinTech folks parade in through their offices in the months leading up to that announcement and tell them all about how we do what we do, but that's all right.
Hey, well, that's as I said, maybe dinosaurs can dance a little. They might not turn themselves into Ferraris, but, you still can, it's not... Yes.
Sorry.
We have a question?
Yes.
Oh, great. And please say who you are before you ask your question.
You get drinks from me tonight. For sure.
Okay, David Wallace with SAS. Question for Kabbage. In the U.S. market, especially for consumer lending, banks seem to be very reticent to use newer analytical technology because they can't explain what the model does to the regulators. satisfaction. At least that's what we hear. So do you see that as a potential challenge for anyone who's doing lending for consumers? Do you run into that same question from a regulatory standpoint for small business?
We do run into that question. So we build models two ways. We have machine learning models that are developed by our data science teams, and then we use those insights and features that are developed to fold them into traditional logistic regression models that we build. Those models we can unpack for the regulators, and they're comfortable with that. So the feature development is a separate process, and that hasn't created any issues for us that we use machine learning models to develop those. So we do have to we have to answer the questions that are asked. We've been through, like I said, several FDIC audits. In the case of all of our large international bank partners, we're jointly developing models with them using the same exact techniques, and they have to answer to the same regulators. So we're finding a way around it. There was an article in American Banker a couple of weeks ago that asked the question if machine learning models were more biased. And that made me laugh almost out loud, because the idea that a machine would be more biased than a human is sort of entertaining. So I think over time, folks are going to get it, but I think it's going to take a little while.
But I mean, this raises an interesting issue, because we also, when we talk about RegTech, and we haven't talked about RegTech in this panel yet, but normally we talk about RegTech, and Matteo defined it earlier, and we didn't go into sort of AML, CFT, sort of know your customer, compliance, basic compliance sort of stuff. But to some extent, do we also need not only for the regulator to understand what you do, but to have their own technological capability to run their own models that can check your models, as opposed to just being completely faithful to what you tell them your model does? And I mean, I don't know.
In our case, that's what we do. So because the models are jointly developed, they have access to the data. That's not a particular issue for the institutions, because they're part of that process. I don't think anybody here is building models in a black box and saying, "Here you go, use the models."
Yeah, I also have a pretty interesting perspective on this. I spent a whole bunch of time in management consulting, specifically focused on regulatory reviews and stress testing and things like that. And long story short, it's always going to be a mix of both, where part of, and some of the frameworks you were talking about before, Basel, et cetera, a lot of that has to do with pushing modeling questions onto banks themselves. You need to build your own models, develop them, justify them, defend them. Obviously, that extends to any providers or counterparties or whatever that you're bringing into that. The Fed is still always going to stress test things their own way and crunch them through their own models as well. And it'll always be a little bit of mix.
We have any, now that we've broken the ice, any other questions to take the bouncing cube? We're running near the end, so if we don't have any more questions, do the panelists have sort of like one final tweet at the end of the day you want to stick into people's minds? And I literally mean a tweet about SME and FinTech. I mean, it's an optional thing, but...
One of the biggest opportunities of FinTech.
Okay, that's a tweet size. Any other takers?
It used to be that fintechs were supposed to eat the lunch of banks, but now fintechs are having lunch with banks.
Okay.
I think the future is all about hyper-personalization. It's going to be like it was 100 years ago when you went to your local banker, and I think it's going to be a better experience for small businesses. That's more than 140 characters, but...
What are you doing to lower your costs to serve SMEs today? And where are you going to get digital data to do it?
Wow. Well, I'm going to say it doesn't have to be like your parents' SME business in all ways. And with that, let me thank our panel. Let me thank Zack, Kathryn, Ruth, and Anatalio. And thank all of you for sticking it out to the bitter end. Thank you, FintechStage. Thank you, BAI.
I'm actually very happy that we have streamed a live stream, not live, but a recorded stream of this session.